please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, we're back at 9972, so there seems to be some amount of selling pressure which is coming in at higher levels, so do watch out for that. But nonetheless, we did have some news with regards to CBI raids which are ongoing at the office of 63 Moons as well as Jignesh Shah's residence. Utkarsh is here with all of the details that he's picking up. All of this is source-based. Utkarsh, over to you.
So what we are picking up right now from our sources is that raids are on at this point of time. Raids are on at the office of 63 Moon Technologies, Jignesh Shah's office, and the ex-employees in CEOs, Shrikant Javalgekar, Joseph Messi. Now remember, this case is about the IPO of MCX, which came back way back in 2012, and CBI believes that there has been some kind of kickbacks which have been given to ex-SEBI officials in this case, and due diligence was not really proper when the IPO happened. So this is the case which CBI is investigating at this point of time, and that is the reason why all the raids are happening. We'll get more clarity in some time of what CBI is really looking at through these raids. So we'll keep you updated on whatever happens in this case.
Okay, all right, Utkarsh. So this is with regards to, I think, the MCX IPO which had hit the markets in 2012, and Utkarsh is trying to get more incremental information. But maybe there could be some amount of possible kickbacks which have been taken place with ex-SEBI officials, etc. But more details on that from Utkarsh as the day progresses. But Ashwini Gujral is here to talk about the markets now. Ashwini, we did hit 10,000 just momentarily, but we're now back at 9972. So overall texture of the market according to you now?
So the point is that it's totally bombed out. So from an intraday type perspective, there is no value in being short, 150 points lower from yesterday's close. So that way, the risk is that if you are short and something changes just a little bit, Dow futures becomes positive or some statement here or there, you could get into trouble. So I don't think you should take a short trade. Maybe if you are a little adventurous and you think it's overextended, etc., it's possible to take a long trade, keep a stop, say around 99.50 thereabouts, and the odds are, in case something changes or if markets start to recover, we could have a bit of short covering even here. Having said that, today, large banking stocks have come off very sharply. I mean, the amount they move in a couple of days, they've moved in a couple of hours. So my sense is that SBI and ICICI have seen a fairly decent decline even in the past few days. And maybe just from an intraday perspective, if you buy SBI here with a stop of about 230, look for a target of 245. This is all in case that bounce happens, because from here, shorting may not pay all that much. ICICI Bank is a buy with a stop of 272, target of 284, and techs are doing well. So Infosys is a buy with a stop of 1160, target of 1200.
Ashwini, makes sense to buy some next month calls or something?
See, I won't go that far, but see, this call is just intraday. Overall, markets have broken down and probably we will head lower at some point in the next few days. Just intraday at 11 o'clock, you're down 150 points on the Nifty. There is very little space in terms of if you see the average range on the Nifty. I think buying of calls will happen, but that should take some more time. I think it's a bit early to buy calls.
Okay. All right, Ashwini, we'll let you go on that note. Thanks very much for joining in and talking to us. So those are the technical calls which are coming in for the market. 9977 is where we're at. If we could just glance at what the European futures are doing and we could pull that up for our viewers, we'll just get a sense in terms of where they're placed right now. So that should probably come up on your screen. Remember that all the Asian markets were showing deep cuts of anywhere between 3 to over 4.5% odd. So let's see where that is currently placed. The FTSE future currently down around 1% as we speak.
Okay, 140 points lower. So this isn't getting better. Ashwini was on. He was saying that maybe, just for the intraday, because the market is bombed out, and I think an absolutely perfect way to describe things. There could be a bit of a bounce, just intraday kind of view. But let's see if that happens. But for now, we're pushing lower, 9972. So we're about 10 points away on the Nifty from the day's low. Manishi Ray Chaudhary is with us, Asian equity strategist at BNP Paribas. Is with us to talk about Trump tariffs, trade war, markets. Manishi, thanks very much. So are we, now we can't say shots fired, no trade war yet. I mean, this is now escalating, right?
Right. This is escalating, thankfully it's not really affecting entire Asian region or the emerging market space because, if one looks at the recent tariff orders, there are certain exemptions that the US has given. So this seems to be more directed more at China, and we have of course had the retaliatory, tariff impositions as well. But, the impact on valuations on stock prices is likely to be more widespread as we are seeing across the markets. So, this is something that we have to kind of grin and bear with for longer. I don't think there's any, short term, in the short term, there's no way out of that.
Manishi, hi. Thanks very much for joining in today. We've seen around a 9 to 10% correction from the top. How much of the bad news is probably already factored in for us, and how much more do you think is probably left for us in terms of a correction, if that's the case?
If you look at India specifically, the bad news is actually on two fronts. First, the global bad news, which is of course impacting the entire region. Second, the local bad news, which in particular at this point of time concentrates around the banking sector, the non-performing assets which seem to be increasing, seem to be burgeoning every day, and also some degree of uncertainty on the political front, that's domestically. So we think that as far as India is concerned, in the near term, the volatility, the underperformance relative to Asia may not be over yet. It can continue for some more time, because while the rest of the region is impacted by the global uncertainties surrounding a trade war, etc., in case of India, there's something more to add. And in particular, I would be worried about this, what's happening in the banking sector, because it could make the public sector banks as a whole a little more reluctant to lend, a little more cautious about lending. And they make up almost 70% of the banking universe. So that's not good news for an eventual recovery of the capex cycle as well. So I think, we've seen an underperformance by India. We may have to bear with that for some time longer.
Okay, let me put it this way. Do you think it's extremely unlikely that we will go back or retest, all-time highs made earlier this year?
I recall you're talking about the third week of January when the Sensex was at, about 36,000 odd, a little more than that. Our target for the Sensex by the end of 2018 is actually slightly higher than that. It's 37,500. And we're not really tinkering around with that right now. And that's predicated upon no re-rating from the end 2017 levels, but just factoring in about 13 to 15% earnings growth for fiscal 2019. And we think that that's still likely to come through. Despite what we have seen, particularly on the banking side, we think that, the earnings environment has improved slightly. If you look at the October-December quarter, which was reported recently, apart from the public sector banks and healthcare, we did not see a very significant underperformance in terms of earnings estimate correction in any of the sectors. In fact, some sectors which were doing badly till recently, they've improved slightly. I have Indian IT services in mind here. So we think that from the January to March quarter, and particularly from the April to June quarter, we will see some degree of revival in earnings growth, and which would again come back, therefore, to early teens kind of earnings growth for fiscal 19. I think consensus estimates are still slightly higher than that, so consensus may need to downgrade the earnings estimate slightly, but the worst of the earnings estimate downgrades are clearly behind us.
Are you Manishi, are you suggesting that we
actually optimistic?
Yeah, fair enough. No, just a quick point. But targets are stock prices move up, targets are revised higher, stock prices go down, targets are revised lower. I mean, it's the ecosystem that we are in, right? I mean, but are you really saying that we retest the previous highs and at some point in the year we put all this behind us, go to a new high? I mean, is that what you're saying? Earnings may come, but I'm asking you what the market will do. Your instinct, yeah.
I mean, I personally think yes. In fact, that's what I just said, that I'm still not willing to change that full year target of 37,500 now. So if we really achieve that by the end of 2018, I'm not saying that it would happen in next 1 or 2 months, but we still have about a little more than 9 months to go till the end of the year. And I think that, yes, it is a possibility that we would reach our target. Now, having said this, I think in the short term, we have to bear with volatility. And that's the point I've been making repeatedly, because many of these recent reasons for concern, many of the recent drivers of volatility are unlikely to vanish in a hurry.
Manishi, 37,500 is your target for the Sensex, but what do you think is the biggest risk which could play out on the downside to your target? You did mention politics, you did mention the global space, you did mention banks. Earnings aside, which would probably be a game changer to your target?
All right. I mean, it's clearly a broad-based derating of emerging market equities. Today we are seeing quite a few variables playing out at the same time. On the one hand, the US is quite optimistic about growth going forward, and therefore they're clearly in a path of monetary tightening. We feel that the Fed would possibly hike 4 times this year. One of those hikes came through just a couple of days ago, but there's still 3 more to go in our opinion, and followed by 1 more rate hike in 2019. I think the market's expectation is still a little more benign compared to that. If it plays out this way, the usual reaction of the fund flows is to gravitate towards the developed markets, which are felt as, believed to be safe haven. We have already seen that happening. I mean, even though the FII flows in India are still positive in the first 3 months of the year, one can't rule out another round of FII flows moving out. And if that happens, the entire emerging market universe could be derated, and it could stay at a lower level of valuation than we had seen historically.
Okay, well,
so I think the danger to Indian equities possibly arises from emerging market derating, and if this whole, the attempt at repairing the balance sheets of the public sector banks that keeps on getting delayed, and we discover that the extent of the problem is actually bigger than we thought initially.
Manishi, is global growth also, I mean, what are the likelihood that global growth starts to falter? I mean, we had Eurozone data coming out yesterday, right? I mean, it didn't get as much attention because of Trump and tariffs, etc. But that hit markets. I mean, you look at DAX, etc. That's when Europe started to sell off. We've had no problem with global growth so far, but that is now, I don't know, maybe first indications that will falter. Maybe it's peaked out.
Well, as of now, growth does not seem to be a concern.
Okay.
If you look at some of the drivers of low growth, like consumption resilience, that has actually been at a, almost a historical high over past 5 to 7 years. And most of the, the indicators of consumer, consumption sentiment rather, they seem to be going up across all geographies. In fact, I think it's this buoyancy, it's this growth buoyancy and the outlook on growth that actually permitted or persuaded the Fed to carry on in its rate hiking path. And if you look at the most recent commentary, I think, they still seem to be optimistic about global growth, and that is why the commentary might sound like a little too hawkish to many observers. At this point of time, growth is not a concern. The only thing we would need to watch out for, is that if this whole trade war escalates much further, there are some, thumb rules or, some brief studies that we have seen, which seems to say that if the average import tariff across nation increases by about 5% or so, then there could be something like a 5 to 6 basis points or about a 0.05% decline in global economic growth. Now these are just pure ballpark numbers at this point of time, and one does not know how this whole trade protectionism would play out. But this is something that we have to watch for very closely to figure out whether the current level of growth buoyancy would continue or not.
Okay. All right, Manishi, we have to wrap up this conversation, but always a pleasure listening to your views. Thanks very much for joining in and talking to us. So that's the view coming in from Manishi Chaudhary. But just want to point out, we're probably very close to breaking that intraday low of 9961 for the Nifty at this point. So do watch out for this fresh round of selling, which is coming up for the markets. In fact, we're just about at that level almost. 9962 is currently where we're at, and 9961, which was the intraday low, which we had hit when the markets had opened. So it seems as though we are, let's see whether we manage to sustain that or not, but it seems as though there is this fresh round of selling which has come through. We have the Bank Nifty, which is down around 2% at the mid-cap index, which is starkly underperforming, so it's down around 2.2%. If you look at all of the losers on the Nifty space, Vedanta, Hindalco, Tata Steel, Yes Bank, Axis, SBI, Bajaj Auto, Lupin, it is completely sector agnostic at this point in time. So you can see that fresh round of selling. In fact, fresh intraday low for us now at around 9960, 9959. We need to take a break. Some news on Max Fin, which is flashing on your screen. They've acquired 0.74% stake in Max Life from Axis for around 153 odd crores. We need to take a break, but we will get talking about more news, more perspective on the markets once we're back. Stay tuned.
Okay, well, if you thought it wouldn't get worse, it has gotten worse. The market has basically made a new low for the day. We're at 9,958 or so, and we got to about 54 earlier, 9,954 earlier. So this is getting a little bit worse. Let's see if it gets substantially worse, but because from the last low, we've dropped another 10, 15 points. I mean, but it's not going in that direction one way, at least not right now. Let's quickly put up Asia, because you look at China, you look at Kospi or Hang Seng. I mean, all markets have given up a little bit more in terms of gain. So, what might also be happening is that markets are tracking each other in terms of what is losing how much, and whether things are getting worse in one region, and that kind of sort of rubs off at times like these. I think we've got Ashwini with us. Why don't we bring him back in? Ashwini was saying that maybe you get a bounce just for the intraday because it's already all bombed out. Ashwini, I mean, your sense, still hold that view, or what's the sense?
See, that view has a good basis because hardly 120 shares are advancing. I mean, how low can you go? I haven't seen in 20 years a number of advances, even on the worst of days, go below 50. We've had government collapses, election reversals. So basically every stock, large stocks like ICICI, State Bank, they're all down 3%. Reliance, Maruti, everything is down. There's nobody left standing now. So it's very difficult to sell into this market. And we've been falling from 10,500. Today we've almost at 99.50. So it's almost 550 points at a stretch. Bank Nifty, it's 1,200 points at a stretch. Markets generally don't move like that. So that way, just from the intraday style perspective, and now we've taken even April calls because, this sort of global crisis, given what the world has gone through in 2008, generally tends to, get diffused or something comes out. Overall, longer term view remains down, but just right now, it's totally bombed out. Don't do anything silly in terms of, selling right now and then getting trapped at lower levels. Investors, if they have to do something, buy into quality, Maruti Suzuki, Reliance, things which are holding up like Pidilite, Jubilant Food, Tata Global, buy, all kinds of ETF, the mid-cap junior ETF or even the Nifty ETF. So this is that sort of day when you will get, a lot of things to buy, and you are buying below 10,000. So it has some kind of safety. Overall, these crises blow over. Earlier there have been trade wars, they get sorted out. So, people can use the opportunity also, but just intraday, I don't think from 150 lower, there's a big chance that now the Nifty could go below 200, although that can happen, but odds are low.
Okay, fair enough, Ashwini. We're going to let you go on that note. Thanks very much for joining in with your quick view. Just keep your eye out on the futures as well. The FTSE futures now at the low point, and the Dow futures also showing an almost 200-point cut. With that, it's a wrap on trading up, but stay tuned. Halftime report will take you through the market.